Okay, good morning, everybody. I trust that you all are well this morning. Thank you for joining in. We are going to be tackling some of the tax matters that are obviously valid and rife right now with SARS, especially with tax season opening in a few weeks. So I just like, before we start, I would like to just introduce myself. My name is Maxine Naika. I am a professional accountant and a tax practitioner with over 8 years of experience with SARS, and I really enjoy resolving tax-related matters. Joining me today is my colleague, Erin Sneeman. She is a fellow chartered certified accountant and a tax specialist with over 10 years of experience. She will be assisting us with Q's and A's at the end of the session. So let's get right into today's session. So today we are going to look at the tax obligations of individual taxpayers for the 2023 tax filing season. And so I'm going to go straight to our slides. Okay, today we're going to discuss the following matters: tax filing dates, auto assessments, completing a tax return, home office expenses, travel allowance, and banking details. So firstly, the tax filing season will open on the 7th of July, 2023, which is less than 2 weeks away. Previously, it used to open on the 1st of July, but this year SARS has changed it and they are now allowing it to be open on the 7th of July. Auto assessments will start to be issued from the 7th of July, 2023. So when you log onto SARS e-filing, you will be able to see and view your auto assessment from the 7th of July onwards. SMSs will be sent to auto-assessed taxpayers from the 1st of July. So from the 1st, if you are an auto-assessed taxpayer and if you fall into that category, you should be getting your SMS around the 1st of July to say that your auto-assessment has been issued. You can then either accept or decline this auto-assessment. If you choose to reject the auto-assessment, you will need to file a return in the usual manner, going on to SARS e-filing and then following the prompts and taking it on from there. And so our tax season's dates, which is crucial for the 2023 tax year. Filing season dates, as I've mentioned, tax season and filing opens from the 7th of July at 8 p.m. in the evening to the 23rd of October, 2023. Those are for tax payers who will be filing online. For those taxpayers who cannot file online, you can do so at a SARS branch by an appointment only. So if you go onto the SARS website, www.sars.gov.za, there is an option that says book an appointment. You then click on book an appointment. You then book your appointment as a taxpayer. It will bring up a page to enter all of your details, the reason for your appointment, and the date, or your preferred date and time. So you then book your appointment. They will send you an email and an SMS to say that your appointment has been confirmed. And then you will obviously present SARS with all of your documents, such as your ID, your tax information, and then you will have the appointment where they will fill out your tax return for you. For those taxpayers that are provisional taxpayers, the tax season opens from the 7th of July at 8 o'clock in the evening as well. But you have until the 24th of January, 2024 to file your tax return. Okay, so let's go into auto assessments. The auto assessment process was introduced in 2020 as a result of the COVID-19 pandemic. And the whole reason that SARS introduced this auto assessment is due to an end-to-end service. They wanted to also reduce the branch time and reduce the crowds and the amount of people going into the branches. It's definitely a much quicker and a simpler process. And SARS also wants to make it easier for taxpayers to comply and obviously submit a tax return. Auto assessments are tax returns that SARS has completed with all the information received for the taxpayers from third parties. So from your employer, for example, would be your IRP5 or your IT3A. From your bank, it will be your IT3Bs and your IT3C certificates. From your medical schemes, they would receive your medical aid certificates, your retirement annuity certificates that will be received from your retirement annuity funds, and so forth. Taxpayers will receive such an SMS, as I said before, starting from the 1st of July, 2023, if you qualify for an auto assessment. So you should get something like the following that would pop up on your cell phone. It would say your tax reference number. They would block out the first few digits, and it will show the remaining digits. And it would say that your 2023 year of assessment tax calculated results in 20,000 based on the information at SARS's disposal. You can either accept or edit your return through the SARS digital channels. Failure to do so may result in SARS raising an estimate assessment, and for more info, visit the SARS website. Okay, auto assessments. You can then either accept or reject these, as I've said before. So if we look more into this, our taxpayer has two options, as I've said. You accept it, that comes from SARS. And if you do accept it, any credits, so that is a refund that is due to you, will be refunded within 72 hours, provided that your banking details are correct and valid on SARS. That is very important. Any payment that is due to SARS must be made to SARS by the payment date that is recorded on the assessment to avoid interest. So on your IT3A, which is your tax assessment, there are two dates. So that is when you need to ensure that the payment is made before those dates. There is a first date that appears, and then there's a second date in which SARS does not charge interest. So you need to ensure that payments are made, otherwise interest and penalties will be charged for any late payment. So if you now decide to disagree with the auto assessment, maybe because there's an amount that could be wrong, or maybe there's something further that you need to disclose on your return, you can definitely decline it and choose to edit the return by supplying the relevant or missing information to SARS. As I've said, you have until now you have until the 24th of October to file a corrected return. In previous years, especially in the 2022 tax year, you only had 40 days to either accept or reject this auto assessment, but SARS has now allowed us until the 24th of October to make that decision. So a taxpayer's obligation. Each taxpayer needs to validate their auto-prepared tax return with the information they receive from third parties before accepting this assessment. Only once a taxpayer has compared the tax documents he or she received from his or her employer, medical aid scheme, banking institutions, and other parties in respect of the 2023 tax year to the SARS issued auto assessment and agree the figures, should you then accept this auto assessment. Taxpayers who have more complex returns, travel allowance claims, will in most cases not be able to accept their auto assessments. I think we're having a technical issue. Can everybody hear me? Can everybody hear me? I think we had a small technical issue. Okay, I'm just going to carry on. So for example, if you have a travel allowance, SARS will not have this information because you will have your logbook on your side. So therefore, this information will not appear on your auto assessment, and you would therefore have to decline that auto assessment that has been issued. So what is important is that taxpayers must not just automatically accept the auto assessment without carefully checking it. You know, many times we assume because it's coming from SARS that all the information is correct, but I would thoroughly, encourage you to check that everything is included, especially the amounts. Sometimes we've had issues in the past where, for example, the interest on an IT3B might be overstated or understated, and then that later opens up a whole other portal to an objection or a further assessment issued by SARS. So it is important that when you get this auto assessment, just go through it, even if it takes you that 5 or 10 minutes, to ensure that SARS has all the correct information, just to provide any further assessments being raised later on. So this is what will appear. So when you log into SARS, and when you click on your return for the current year, in this case 2023, it will show you that you have been auto assessed, and then you can view this auto assessment. It will then pop up to say that SARS has simulated a tax calculation for you, and then you click on continue to view this calculation. Once you view this calculation, you either accept it or you edit the return. As we've said, you edit it because you don't agree with what SARS has proposed, or you have further information that you need to disclose. So if you choose not to agree, you then have to complete your tax return. So when completing the tax return, it is important to remember the following. When opening your tax return, you are presented with a wizard form. The answers to the questions on the wizard will determine what sections of the tax return need to be open. SARS automatically completes part of the wizard on your behalf, but you need to ensure that you check the questions and answers carefully. So for example, on the return, it will say, is this declaration made by a tax practitioner? So should you choose to click yes, it will then open up a tab that will allow you to fill in the tax practitioner's details. If you click no, that tab will not appear. Therefore, there's also other questions that come up. Did you receive interest? Do you have a medical aid? So all of those questions, it's very important that you answer correctly, because whether you click on yes or no, there will be a tab that will open for each of those. SARS will also load third-party data onto your return, which, as we've stated, you need to ensure that whatever information SARS is loading is correct. Don't just assume that it has been correct because it's been loaded by SARS. Okay, you can use your certificates to assist you with the tax return. The certificate shows source codes which can aid in preparing your tax return, as the return shows these codes as well. So here's an example of an IT3B provided by a bank or whichever financial institution, and it shows you your foreign dividends with the source code 4216. So if you go onto your tax return, there will be a tab that allows you to add in foreign dividends with the code 4216. And for example, if the foreign dividend amount was 1,000 Rand, you would then put in 1,000 Rand next to the source code 4216. It's the same with interest. Interest is coded as 4201. So wherever you see the 4201, you can put in your interest figure. However, SARS has also changed this to where you now have a tab that allows you to put in the actual detail of the institute where you're receiving the interest, for the bank, for example. And it will also ask you for the account number, because they want you to be more specific of which account this interest is coming from. If we now go on to travel. When completing the travel section, make sure you have the cost price of the vehicle. This is very important, because if you are selected and if the return is selected for a review or an audit, SARS will want proof of this purchase price. In many instances, you can upload the contract you've entered in, the HP agreement, or even the invoice. Whatever shows the cost price, it's very crucial, because that is what SARS needs and that is what they would want to see. SARS is clamping down on logbooks. So make sure that your logbook is in the correct format and has all the required information. We've had instances in prior tax years where logbooks have been rejected and therefore they do not allow you to get the tax benefit. So if you look at this table below, this is the SARS logbook. This is an example of one of the logbooks that SARS has on their system. We highly recommend that you use the SARS format, because this has everything that SARS is looking for, where you put in your date, your opening and closing kilometers, the business kilometers, and the reason for your travel. Over the last few years, SARS has clamped down on the logbooks and the detail provided when making travel claims against travel allowances. As I've said, this is why it is so important that you show the correct dates, the different opening and closing kilometers, the reason for your travel. We've had instances where clients sometimes don't put in the reason, and SARS has then rejected that logbook. Travel claims are also being disallowed because sometimes people do not even show in your opening balance or just a closing balance. So make sure that every detail is filled in. Do not leave out even just the slightest detail, because logbooks are then rejected. And then a taxpayer can go from having a refund to now having to pay a large amount of money into SARS. And that just then causes a whole delay in your refund being paid out. And we also strongly advocate that you use the SARS logbook, as I've shown you the one that was just shown just now. That is on the SARS website, on the www.sars.gov.za website. You then can search for your logbook or a template for the 2023 year, and that will then allow you to fill in the details accordingly. So now we're going to look at home office expenses. In 2021, SARS released an updated interpretation note, IN 28 issue 3, regarding the claiming of home office expenses. This document adds to the previous interpretation note with SARS, including more information pertaining to the home office qualifying criteria. So many companies now allow employees to work from home. I believe this was a lesson that was learned during the COVID-19 shutdown and the pandemic. And so for employees to make a home office claim, SARS has strict criteria and supporting documentation requirements to accept these claims. It is important that both employers and employees evaluate the circumstances around the home office claim and the likelihood of a successful claim with SARS. Although the employer may have provided a letter to the employee confirming that the employer has requested the employee to work from home for a period or indefinitely, the onus of proof that the employee actually worked from home remains with the employee. This is something that is not easy to prove. The employer cannot guarantee SARS that the employee actually worked from home. All they can guarantee is that the employee was not present at the employee's workplace during that time. It is quite possible that the employee went and worked at another venue because it was more conductive or more suitable work environment. In this case, the employee would not be able to claim. So for example, maybe somebody found it convenient to work at a coffee shop, or due to load shedding, you went to an internet cafe and you did your work. This is therefore difficult this is a difficult thing to prove, and SARS will need such proof that you have been working from home. The section of the home used must be regularly and exclusively used for the purpose of trade. This means that even if one worked from home, the actual area allocated must have been regularly used. If it's not been used, the allocated would then disqualify the employee from claiming. Again, the burden of the proof remains with the employee. Expect challenges from SARS in this space because it's not something that can be easily proven. Regarding exclusivity, if the employee works on their laptop at the dining room table, this does not constitute an area exclusively used, and as such, they won't qualify for the claiming of the home office expenses. If they do have a properly designated and equipped area, see example 3 contained in the notice regarding letting children play or watch TV in that area, this would be difficult for SARS to prove. For example, if you're having toys lying in that area, this will be regarded as not exclusively used. Working couples, on the other hand, who are both trying to work from home will definitely have a challenge in this regard. Because if you share the same home office, it is therefore not deemed as exclusively used. If both parties put their tools of trade in that area, it is not seen as being exclusively equipped. Couples may then need to consider putting up drywalling or a roof high screen in the home in order to get around this. I know it does sound a little bit silly, but these are the challenges that we need to overcome with SARS. Then there is the concept of mainly. If the employee and the home office meet all the requirements, but much of the employee's time during the working from home period was spent being out servicing clients at a client's premises, then that time spent at the client is therefore out of the home office. This needs to be then compared to the total time that the employee should have been using the home office or performing their duties. If the time out of the client was more than the time in the home office, then that employee may well find that they cannot claim any home office expenses because they do not meet the mainly criteria. This is going to be a hard one for anyone to prove, but carefully though, as the travel logbook would therefore be proof that SARS could use to say that you do not work mainly from home or that work was not done mainly from your home office. Finally, for those taxpayers who have installed a fiber line and a connector in their office, these cannot be claimed as expenses. There's an interpretation note that you can refer to in this case as well. The content of this interpretation note should be carefully studied by all taxpayers contemplating making a home office claim in the annual tax return. SARS is likely to challenge every such claim, and in a lot of cases, the deduction claimed by the employee may not be worth all this effort. It is also important for employees to know what they're getting into before taking SARS on in this regard, because it will then cost you valuable time, or you might just end up being extremely frustrated. To better understand the legislation, employees are advised to consult with an experienced tax consultant who has experience in this field. It is therefore advisable that you contact us and speak to us as one of your tax specialists in this regard, as we will therefore help you with what you can claim, what cannot be claimed, and especially the portions that need to be claimed as well. So if we look at the capital gains tax implications, the portion of capital gains attributable to the property used as a home office will be calculated based on the number of years a home office deduction was claimed over the number of years of ownership. So if we're going to look at an example, if there was a home that was owned for 12 years, of which 4 years a 10% deduction for the home office was claimed, and the gain was 2 million, the capital gain is calculated as follows. It is your 2 million times the apportionment of 4 out of the total of the 12 years at 10%, which gives me 66,666 rand. Therefore, you then take the total gain less the capital gain exclusion, which is 40,000, and that results in 26,666 rand, which is your inclusion for capital gains tax purposes. Banking details, which is another crucial issue with SARS. So banking details can be changed on e-filing by updating the RAV01 form. SARS will validate the banking details. In the event that they are unsuccessful, you will then need to book an online appointment. In some instances, SARS requires that you validate yourself. We've had instances where we've updated banking details for clients on SARS e-filing, but sometimes SARS wants to validate the taxpayer. You then have to book an appointment, which your practitioner can also do on your behalf, which we have done for clients as well. We then upload all the necessary documents, and then SARS validates the taxpayer, and then they will then activate or validate the banking details on SARS. Prior to the date of appointment, you will be sent a case number, which you will have to upload all the supporting documents to on that SARS portal. As I've said, if you would like us to handle it as your tax practitioner, we then do all this admin for you, and we upload all the necessary documents to SARS, and we also then also go ahead with the appointment on your behalf. A SARS consultant then calls at the scheduled appointment time to verify the details with you. As I've said, we can handle all of this going forward. So I've just listed some final thoughts, some terminology. Many times you might hear your tax practitioner or on SARS, or many people might just mention an IT3B, IT3C, IRP5, and IT834. But what does all of this mean? So I just wanted to go through a few of these. An IT3B is simply a tax certificate from a financial institution, such as your bank, which shows a summary of your local and foreign interest and dividends earned for that tax year. An IT3C is a tax certificate received from a financial institution, again, such as your bank. This shows the disposal of any investments that you had for the tax year. An IRP5 is an employee's tax certificate, which shows the income deductions and related taxes for that tax year. An IRP5 certificate is issued when an employee qualifies and pays PAYE. If your taxable income is below the tax threshold and no PAYE is applicable, then an IT3A certificate is issued. This is the same as an IRP5, it's just that there is no tax payable, no PAYE that is reflected. An IT834 is a tax assessment that is issued once your tax return has been submitted. So once, for example, your 2023 tax return has been filed and submitted to SARS, you are then issued your tax assessment, which shows a summary of everything that has been submitted on the tax return, but also will show you what is payable to SARS or the refund that you are due from SARS. And so last and final thoughts. We need to be very aware of scams. SARS will not ask you for your personal details via an email or a survey. We've had many instances where clients have been emailed regarding or SARS requesting banking details, or they need to then pay an amount to SARS, but we know that those have been scams. So please be very careful when receiving any email from SARS, as SARS will not ask for personal details or even payments via an email. If your return is selected for an audit, all the necessary documents will need to be uploaded, and if you are due a refund, this will only be paid out after the audit is finalized. So say, for example, SARS wants to audit your 2023 tax return. You need to upload all the necessary documents pertaining to the income that you disclosed, such as your IT3Bs, IT3Cs, your travel logbook, and so on. But then if you are due a refund, this will only be paid out once SARS has finalized that audit. And so lastly, one of the best investments you can make is to consult a tax advisor. We are so confident that we could help you save money, so much so that if our suggestions would not save you at least the cost of the consultation, we will not charge you for that consult. So I look forward to hearing from each and every one of you. Thank you, everyone. I would now leave the floor open for any questions. As I said, Erin Sneeman, she's on the line. She will also be assisting us with any Q's and A's that we have at this point of the session. Thank you.
Thanks, Max. Very informative session. Yeah, if there are any Q&As, let's see. Contact details. Right, So for contact details, you can contact HR Talk. So it's tax@hrtalk.co.za. Is that the email address, Max?
Yes.
Okay, I'll send that there. Okay, so some of the questions we've got are, okay, Chandra Kruger, how do we deal with institutions issuing certificates late? So in terms of this would be for the RT3Bs and RT3Cs, I'm assuming. What generally happens in this case, they are obligated to have issued all of these by the 31st of May. So everyone should have received them. If there is an error or if they are issued late, you would generally hold off on the, well, the advice would be to hold off on the tax return and you can refresh it. Keep refreshing that tax return on e-filing, and it should then bring up the certificate once it has been issued. If, however, the certificate is not on the system, then you could manually add it. But other than that, I mean, getting hold of the institution to issue that certificate, they are obligated to have sent it by 31st of May. So it should be sufficient time to get it by the November filing deadline. Max, anything you want to add there?
No, that's perfect.
Okay, then we've got another one about home office. So for home office expenses, if I was to rent a property, can you still claim home office? Yes, you can. You would just obviously, SARS would want, if they were to audit you, they would want to have some proof that you are renting that home office. So the best thing would obviously ensure that that lease agreement is in your name. And again, as Max said quite thoroughly there, in terms of the home office, you need to make sure that it is an exclusive use area for the home office. SARS may ask for photos, so make sure you have that. And provided that you've got that room, you can still claim even if you are renting and not actually an owner of that property. Okay. If you had a name change or a change in banking details, would you be required to complete the assessment as per the usual manual way? Max, you might be best to answer that as you are the banking detail guru.
So I just want to read the question. If your name change or change in banking details. Yes, so you can complete your return as normal, but I would suggest that you change your banking details before you submit your return. Because if you had a refund, therefore you will not be able to get your refund, because SARS will say that the banking details do not correspond with what they have from their third party or from the bank on their side. I hope that answers your question.
Okay, yep. We've got a thank you from Trevor. Another question with regards to home office. I'm just waiting for the question to come through. How do you know whether you qualify for filing a tax return if you have not been notified by SARS, either email, SMS, nor received auto assessment notification? So in terms of filing a tax return, there is a minimum amount that you earn before a tax return is required. So if you are earning through PAYE, Max, do you have that figure in your mind?
No, not offhand.
I think offhand, we'd have to get you the figure, but there is a minimum. But if you are earning income from multiple sources, so you've got a salary, let's say you've also got medical aid that's not through your employment, if you've got travel allowance, if you've got RT3Bs, if you've got renting investment property, then of course you'd need to file the tax return. So it's very much a case-by-case basis as whether you'd need to. But if you just have your employment income, then potentially not, because you are taxed through the employment, but there is a limit. So it's best that, yeah, just pop us a mail at tax@hrtalk.co.za and we can let you know that amount and advise whether a return is required. Okay, with regards to home office, can milk and sugar for coffee breaks be claimed? Other than an electricity and telephone, what else can be claimed? Okay, so yeah, so you need to think of a home office as what would be the norm if you were working in an office and sort of replicate that. So some of the things that could be claimed, if there is insurance, yeah, telephone, what other things, Max, electricity.
Yes, even your stationery, printing.
Yeah. printing stationery, water usage. Everything obviously needs to be apportioned according to that space. Yeah, so it needs to be all in accordance with that space. So obviously for tea and coffee breaks, you can claim those through the Home Office. But for everything, for municipal bills that are for the whole property, you need to apportion that according to that space that you are using. So just think of it, if you're working at an office, what expenses would you incur there, and replicate that through the Home Office in apportionment to that space you are using. And then Sharon's just got a tip in terms of deceased estate with earnings, a very small amount during their lifetime. SARS are now asking for up to 5 years of past returns. Yep, that's a great one. Thanks, Sharon. So generally, so from that previous message about question about when to file a tax return, and we are also seeing this when people are actually immigrating out of South Africa as well. Generally, if you weren't obligated to file a tax return, and then it comes time to you either, like Sharon has mentioned here, a deceased estate, or you're wanting to now immigrate, generally SARS opens up previous returns. So sometimes, even if you are earning income just from one source and there is no tax obligation, it sometimes is good just to press the file button, check everything's right, and just press that filing button to ensure that a tax return is sitting with SARS, so it doesn't open up queries later, or penalties or interest implemented because returns haven't been filed.
Right.
Great. Any further questions? Max, anything to add around those questions that we have had?
No, I'm all good.
Great. So if there's nothing further, then what a wonderful session. Thanks, Max. Very insightful and very useful, especially as tax season is coming up just around the corner. If anyone's got any other questions that they do want to ask, our email address is tax@hrtalk.co.za. Just pop a mail there. If you want us to give you a call or just chat through anything, just pop a mail and we will get back to you and answer all your necessary questions and just walk you through the whole tax filing process. The presentation is going to be made available, so it will be sent through to all the participants in the session today. Right. Thanks, everyone. Thanks so much, and have a wonderful rest of your day.
Thanks, everybody.